The future belongs to those who can imagine it, design it, and execute it. It isn't something you wait for, it is something you create. These words from Sheikh Mohammed bin Rashid Al Maktoum, the ruler of Dubai, have been the driving force behind everything this city has become. The bold, visionary projects we see today, they're a product of a mindset that always looked ahead. Dubai wasn't built for the present, it was engineered for the future.
And the real estate landscape here has been a perfect example of that forward-thinking vision. We've seen it in every wave. Marina, downtown, Palm Jumeirah, locations that seemed too ambitious in the early 2000s, but a decade later, these projects have redefined the city's skyline. Then came Dubai Hills, District 1 and MBR City, again dubbed too far out, but today they are the benchmark of luxury villa living. Pattern is clear: vision, infrastructure, opportunity, and exponential returns.
Now, in 2025, we're at the edge of another monumental shift. The next big wave is forming in the south of Dubai, and this is where it's all happening. From Palm Jebel Ali to the Oasis by Emaar and the Grand Polo Club and Resorts. These aren't just big developments, they are the next chapter in Dubai's real estate story. Hi, I'm Hamza Imtiaz.
And I'm Hina Patel. We are from Experienced Realty. And today, we will get into the details of why these projects are set to change the game, starting with the location. When we talk about the south of Dubai, it's not just a geographical area, it's a strategic move. Dubai's 2040 Urban Master Plan has positioned this part of the city as a new frontier. Over $500 billion is expected to flow into this region in the coming years and is already underway.
Take Expo City Dubai, for example. 25 billion dirhams has been allocated to transform it into a hub for technology, sustainability, and culture. The Dubai Exhibition Center is getting a $2.7 billion expansion with projected 600 events annually, making it a central economic engine for the city. And then there's the Maktoum International Airport, getting under a $35 billion redevelopment plan, set to become the largest airport in the world with a capacity of 255 million passengers a year.
But these are just pieces of the puzzle. The Dubai South Master Plan, spanning 145 square kilometers, is being developed as a full-scale urban ecosystem. Residential clusters, free zones, logistic hub, innovation districts, all designed to support Dubai's growth.
And it doesn't stop there. As Dubai expands south, Abu Dhabi is pushing north. With new developments like Al Jarf, this isn't just an expansion, it's strategic alignment. The Etihad Rail is connecting all 7 Emirates and the GCC. And this convergence is already driving momentum.
So with all this transformation happening, what does it mean for these 3 communities? Palm Jebel Ali, the Oasis, and the Grand Polo Club and Resort. Well, let's break it down.
Let's start with Palm Jebel Ali. Waterfront properties have always commanded higher premiums. And globally, these premiums can go up to 40%. But when it comes to Dubai, they're even higher. If Palm Jumeirah set the standard, Palm Jebel Ali is set to redefine it. It's more than twice the size of Palm Jumeirah, with 110 kilometers of coastline, a larger, more refined successor that offers everything from bigger villas, longer beaches, and more greenery.
It's not just about scale, it's about lifestyle. Palm Jebel Ali is going to be the last frontier for beachfront villa living at this scale. A truly next-generation island community. Now, let's move inland and take a look at the Oasis by Emaar. This is where things get exclusive. With just over 3,200 homes spread across 9.1 square kilometers, the Oasis is built for privacy and long-term value. This isn't about volume, it's about creating an environment that prioritizes nature, space, and exclusivity.
Exactly. And as someone who has studied economics, I can tell you, scarcity combined with demand is a classic formula for price appreciation. The Oasis caters to a growing demand for low-density living, especially in global cities where space is becoming a premium. The design, the natural surroundings, the privacy, these are the kinds of assets that increase in value as more people desire them.
And then there's the Grand Polo Club and Resort. This one is all about equestrian living, something that's rare in Dubai. These kind of communities attach high net worth individuals who value privacy, scale, and lifestyle. As Knight Frank points out, Polo estates globally can command premiums of up to 50%. This isn't just a luxury, it's a lifestyle that people are willing to pay a premium for.
Now, let's talk demand and supply. Dubai's villa market has been consistently outperforming other segments, especially since 2020. Villas on the Palm Jumeirah has seen an appreciation of over 110% in the past 5 years, compared to just 80% for apartments. Similarly, villas in Dubai Hills have appreciated by over 105%, while apartments have seen a 75% growth.
That's because there's a structural scarcity of land in Dubai. Only 6.7% of the total residential supply comprises ready villas. Even with all the villa projects coming up, this number is expected to rise much, and it gets even tighter when you factor in restrictions like leasehold villas and those limited to GCC nationals.
On top of that, the demand is coming from a very specific group: high net worth individuals and the ultra high net worth individuals. These people or these buyers are not just looking for a property. They're seeking a lifestyle. They want privacy, exclusivity, and long-term value. The number of HNIs and UHNIs in the UAE has surged by 98% since 2014 and is expected to continue growing rapidly.
Let's dive into the numbers. By 2029, we are expecting 68,295 villas to be completed in Dubai. But fewer than 4,000 of those will be beachfront villas. And when you look at the number of equestrian communities, well, there are only 278 properties in Dubai that offer this kind of lifestyle. That's how rare and valuable these communities are.
And this rarity is exactly why investing in Palm Jebel Ali, the Oasis, or the Grand Polo Club and Resort is such a strong play. You're buying into the top 2% of Dubai's villa market by typology, not just price.
And the returns? Let's take a look. Palm Jebel Ali, a similar trajectory to Palm Jumeirah. When Palm Jumeirah villas were handed over, they were priced at 4,000 dirhams per square foot. Now they go for 8,500 to 10,000 dirhams per square foot. Palm Jebel Ali, with its enhanced infrastructure, is likely to follow a similar pattern. At handover, we could see a 2x return on equity, and in 10 years, the potential for 4x capital appreciation is very realistic.
And when we look at the Oasis, the potential for capital appreciation is staggering. For example, 4-bedroom villas here were priced at 13.1 million dirhams in the latest launch, while similar properties in Al Barari were selling for around 35 million to 40 million dirhams. That's a 170% increase by handover. For the lagoon-facing villas, the upside is even higher, a 200% potential return when comparing to square footage prices in District 1.
And finally, the Grand Polo Club and Resort. Ready Polo estates similar to those at Shivalia estates have seen a 190% ROI. And the villas at Salvada are expected to appreciate by 110% at handover. The lifestyle premium here alone gives it incredible potential.
And when you combine scarcity with high demand, it's a recipe for massive returns. These projects aren't just developments, they're the future of Dubai. And the question is, will you be a part of the 2% who saw it and acted? Or will you look back with regret?
If you are ready to capitalize on Dubai's next wave, we are here to help you make it happen. Let's have a conversation. We are ready when you are.